Нищо. Sam po mobitel išao. Hello everyone, welcome to another live stream. So I'm going to start with my usual 6 currency pairs, and we're going to do some different instruments as well. So the big ones, basically the S&P, gold, NASDAQ, silver, and basically instruments like that. If you have any questions, you can put them in the comments. You can basically put in a request for a chart analysis, and then I will go through it. Or if you have some general questions about your trading journey or the strategy that I use or anything like that, just make sure you put it in the comments. So let's get started with the analysis. We're going to start with the euro and the US dollar. So the title of this live stream is Will the Dollar Pairs Reverse? And they have been going up steadily, but I was looking for something like this to happen, a big drop, and then basically to look for sell setups. Unfortunately, as of this moment, that has not happened. So we just got some stagnation, some range bound price action in this area right here. But basically, I'm still on the lookout for that nice drop to the downside. If I analyze the par price action from the last time that we had the live stream, which was last week on Wednesday, let me just find Wednesday last week. So somewhere around here. So we had this nice uptrend that I think I did comment on. We had this possible flag opportunity, but the flag never fully formed. And then we did break to the downside with this huge red candle, but it could not basically continue down. Instead, we had a big shift in momentum going to the upside. We then broke the high, continued up very correctively. So nothing much was happening. I mean, price was moving up, but there were no high probability entries for me personally. Here, yes, I definitely looked for a buy setup, and I did have my order on a couple of times. For example, at this point, this was very nice. I did analyze this in the prior live stream, but just to repeat. And also here looked for a flag. Right here as well, looked for a flag or a break and retest setup. But then in this uptrend, the more recent uptrend, nothing much was happening. PS price, as I said, was moving up. Maybe this was a nice opportunity, but again, I wanted a bit of a bigger, stronger, more convincing break at this point. So we had like a large wick print, and I wanted the price to go up just a bit more like this, or maybe like this, and then I could place a buy limit and get in on a nice buy setup. That unfortunately did not happen. Instead, price did continue up, but printed a bit of a wick and then another wick, and then we ranged around a little bit, continued up, started ascending here, and right here on the top, yes, I was again very interested for buy setups, either a flag or a break and retest. It was looking nice. It was definitely in an established uptrend, so I had this pair on the watch list, but a high probability entry never formed. So we got the first pullback right here, second pullback candle, but then we broke the high and retraced. And what I was personally looking for was a break of the high with a nice clean close, and then I would set a buy limit right here on this level with, let's say, a 10 pip stop loss. That would be high probability for me. Again, it didn't happen. That is normal. It is just part of the market conditions. So part of the probabilities as well. We're not gonna get an entry every single time, and in the end, it would have been a loss. So if an entry did eventually form, if a flag formed here, it would have been a 1% loss because the price did break to the downside. So maybe it is good that an entry never actually formed. And then we were pretty flat and range bound right here. Huge wick prints to the downside, but I do classify this price action as being range bound corrective, and I'm possibly looking for liquidity sweeps. So for the range bound entry, but for a trending entry, I'm not really interested right here. So I'm not gonna put this pair on the watch list. What I would like to see for a trending entry is I would like to see price continue with this overall momentum up. So we definitely had some nice momentum going to the upside. And I want to see that sort of momentum kick back in with a nice big push and then a flag or a break and retest. So I'm going to be looking out for that sort of price action. For the liquidity sweep, I'm going to have my levels marked right here. So this level, and possibly, depending on what will happen, this low. So the best scenario for me for a range bound entry would be for the price to range around right here, like this. And then basically I can look for an entry. So I can look for something like this and then sell the top, or like this, buy the bottom. I usually go in with a 10 pip stop loss, aiming for a 3-1, and that would be the game plan for the euro and US dollar. Until that happens, I'm going to be more patient on this particular currency pair. Moving on to the euro and the Japanese yen, it has been pretty corrective and range bound in this area. So even the par price action has been very correctively ascending up, so wasn't really that clean. We did have a nice impulse to the upside, and I was definitely looking for a buy setup. Right here, it looked very interesting, and I saw a lot of momentum in this leg, but a buy setup never fully formed. Again, this was the initial flag, and we had our first high, first low, second high, second low, but we never got the entry candle. Instead, the entry candle actually broke the high, negating the whole setup. And maybe it was better because this did end up being a loss and the price did decide to go down. So saved myself a 1% loss right here because the entry never fully formed. Okay, price then dropped a little bit. Yes, I was interested in sell setups at this point because I saw a nice bearish leg of momentum, some nice big red candles. Also, the bottom of the candles is looking very clean. So basically no large wicks, just very minimal wicks, and that is exactly what you want to see if you're looking for a sell setup. Also, when you get candles that are consecutive like this, so basically either 3 consecutive big blue candles or 3 consecutive big red candles, in this case it's red candles, well, usually this pattern continues trending down, right? So we usually get something like this. It is a very powerful pattern, and I definitely place a lot of importance on these sort of candle formations. Again, we never got an entry. Instead, we got a bit of a shift in momentum. Right here, price started shifting to the upside. And at that point, I was no longer interested to look for sell setups. It was just a bit too much buying pressure. When I'm looking to sell, I want to see mostly the sellers win. When I'm looking for buy setups, I'm looking to see basically the buyers being in control most of the time. So here the buyers kind of took control, and I wasn't really happy to go short. It would be a good trade. let's say if I did execute on this flag, it would be right here. Let's say I use the 20 pip stop loss because of the volatility. So as of new, I did start to extend the stop loss on the JPY pairs, especially because they can be very volatile. The dollar pairs are not as volatile, but the JPY pairs have a lot of volatility behind them. The moves are huge sometimes, and just my 12 pip regular stop loss does not cut it and is not big enough. So in those scenarios, when the volatility is very high, but I still want to execute a trade, it is better to extend the actual stop loss to, let's say, 15, 20, maybe even 25 pips. What is the size that I go with? Well, I base it on just a visual assessment, right? So just a basic visual assessment. In this case, I think a 25 pip one would look a bit better. So 250. Yeah, this would look a bit better. But again, it did not fit the plan because of that buying pressure in these legs. So price went down. It then created sort of a V reversal. Is it a clean one? Maybe on the 4-hour it looks a bit cleaner. Not really. I would say this is not a clean V reversal. When I'm looking for the V reversal pattern, I want to see price drop and then go up in the same sort of manner, same sort of time, same sort of style. Here we had a massive drop down, but then the correction to the upside it took some time, right? It took some time. It had some legs. So it wasn't really the same sort of momentum as it was when we were going down. And now the price is just ranging inside of the high and the low. So I'm going to be more patient. I'm not going to put the euro and the Japanese yen on the watch list just yet. I'm looking for a breakout of these levels, and I want to see something like this happen, but then I also want to see price continue with the momentum. I do not want to see the next candle just to retrace and go back in the range. That is not high probability, and that usually signals a longer, more corrective range-bound market. So that is the game plan. I'm not trading range-bound entries on the euro and the Japanese yen. I'm only taking trending entries, and that is the reason that I'm going to be more patient right here, because this looks very flat, very corrective, very range bound. We have some news coming up soon. I think it's the FOMC. No, it's not. Doesn't really matter, but it's good to stay on top of news, especially if you're trading prop firms, because with some prop firms, such as Alpha Capital, which is a pretty shitty prop firm, to be honest, you cannot trade through news. So you have to keep account when are the red folder news events happening, so that you can avoid executing, entering, and exiting trades at that time. What do I personally use? I use the Forex calendar on Forex Factory. That is the most reliable. Just circle the red news and you will get all of the information that you need. That's it for EJ. Moving on to the Aussie and US dollar. Okay, I did take a trade here. It was unfortunately a 1% loss. No, actually, it was a bit of a reduced risk loss. Yeah, it was a reduced risk loss. Let me just see my trade journal. So if I go to my Notion, trade journals, live trade journal, Aussie. Okay, I still haven't put it in. I need to put it in the trade journal. But fortunately, it wasn't a full 1% loss. I'm going to go through the trade. Before that, I want to comment on this very nice uptrend. So this was Wednesday, the time of the last live stream, and I did take a trade after the live stream on Thursday. It was a flag. Now that was a 1% loss. Yeah, that was a 1% loss. Let me break this trade down because it was very high probability. I definitely liked this trade. We had a descending channel right here. Yes, overall price action was a bit flat, corrective and range bound, but if a high probability pattern starts to print even in a range bound market condition, I'm still going to take it because I want to exploit the conducive price action. I still want to take that 1% risk. So here we started to print a nice descending channel, and then the price reversed to the upside, and then we got a quick tight flag. So the warning signs were that the overall price looks stuck in a range, but the positive signs were, and you always have to weigh up the pros and the cons. So weigh up the warning signs and the positive signs. The positive signs were that the price here was just breaking the lows and retracing 1, 2, 3, 4, 5, 6 times. So if you count these dotted lines, the more breaks of the low, consecutive breaks of the low that you get, the higher probability the trade is. So we had this nice, clean, tight channel. Price goes up with some good momentum. I liked this candle, this one, and this one was okay. And then a nice, tight, small flag with zero selling pressure, which is exactly what you want to see. So those are three major confluences. It was Thursday as well. Wednesdays, Thursdays, Fridays are the best days to be taking trending entries. So you can put in a fourth confluence in there. Basically, 4 positive signs, big positive signs, and 1 warning sign. For me, this was worth the risk. So I did take this trade. If I just remove these lines, price went up a little bit. So we did go into a bit of a profit, but then I got taken out for a loss, 1% loss right here, unfortunately. Part of the plan, part of the game, part of the probabilities. Again, my win rate is on the lower side. So most of the time when I take an entry, it is unfortunately going to be a loss. Not most of the time, but like 30 or 40% of the time, I'm going to take a winner. And 60 or maybe even 70% of the time, I will actually take a losing trade. What is the key? I keep the losers small and the winners big. So when I lose 1%. But when I win 5%, 8%, 10%. So I just need one winner to pay for 5 or 10 of the losing trades. So the statistics are there, makes sense, and it makes percentage. So that's it for this trade. Price then did decide to go up in the end. So if I was not taken out for a loss here, this would be a big, big winner. Again, part of the game, part of the probabilities. We started a very nice uptrend. As you can see, nice push up. And I was looking for buy setups all the way here. I mean, here it was looking a bit ascending, right? It was looking a little bit corrective, a little bit ascending. But then the momentum started to kick back in again. And here I did have my order on. This was an absolute no-brainer. You have the established uptrend. You have a nice leg of momentum. 1 candle pullback, no selling pressure, break of the high, very strong momentum, clean close. So yeah, I definitely had my order on, but I did not get tagged in. So I then removed the order when the spread hours came. Fortunately, after that, another setup formed, which was a flag plus or like a small flag, advanced flag, however you want to call it. It's basically a let's say a flag formation, but only out of 3 candles. So you need an inside bar, an outside bar, and then a blue candle is your entry candle, and it works up in the opposite way as well. What is an inside bar? An inside bar is a candle that has a lower high and a higher low than the previous candle. If you look at these numbers on the top, you're going to see the high is lower than this one, the low is higher than this low. So you need an inside bar, outside bar. Outside bar is the opposite of an inside bar. It is high is higher than this one, low is lower than this one. And then you need a blue candle as the entry candle. Very powerful formation, very powerful pattern. Has a high win rate and a high profit expectancy as well, especially on the Aussie Japanese yen and the New Zealand Japanese yen. So if you backtest the flag plus on those currency pairs, you're going to see that it makes a lot of percentage, really a lot of percentage. So when I see it form in the markets and I see an established uptrend, it is just a no-brainer to take this trade. And let me put this back. Okay, let me put back the risk to reward. 10 pips I used for this trade. Went into a little bit of a profit, maybe 1%. No, not really. Okay, 0.8%. And then went down and took me out for a reduced risk loss. When the price broke the high, I did remove my stop loss 2 pips below this low, and then I got taken out with this red candle. So this was like a minus 0.6% trade, something like that. Happy with the trade, no-brainer, very nice setup, and I would take it again 100%. I would take the first trade again, I would take the second trade again. Both of them were extremely high probability in my book. Right now we're ranging around a little bit. Why did I title this live stream that the dollar pairs are going to reverse? Well, basically it did look like they were going to reverse. A nice ascending was printing. Usually when this nice ascending prints, usually you get a downtrend, right? So this was looking nice. It was looking clean. Every single high was getting correctively broken. If you look at, let's say, this one, corrective break, this one, corrective break, this one, corrective break. So the price action was narrowing down. The price action was getting smaller, slower, more corrective. That's a very good sign that a downtrend will soon start. Let me just check if the comments are working. I'm just going to open it on the phone. Let's see. Okay, yeah, they should be working. Okay. Basically, we never got a confirmation. So we never got a confirmation of a nice, strong downtrend. Instead, price correctively broke the low, which is not good. That is not something you want to see. Doesn't mean we still cannot get a downtrend, but it is not looking good as of yet. What it is starting to look like is an ascending channel going into a descending channel, and that actually signals range bound price action. So I'm not going to put this pair on the watch list just yet. I want to see that confirmation. I want to see a nice strong push down and then a nice sell entry setup so I can exploit this ascending channel right here. If that doesn't happen, yeah, I'm going to definitely expect more of a range bound and corrective market. I'm going to expect something like this to happen. That's not good. It is good for the liquidity sweep. So if this happens, of course, I will not be looking for any trending entries, but I will definitely look for a liquidity sweep to basically sell this top or buy this bottom right here, or maybe this one. We're going to see how it will form. So that is the game plan. Currently not on the watch list. I'm being more careful, being more patient with the Aussie and the US dollar, and just looking for a bit more price action. Today is only Wednesday, so we still have Thursday and Friday, which are big days. The price tends to move a lot during Thursday and Friday. So we just need to be more patient and wait to see what will happen. Next one on the list is the Aussie and the Japanese yen. Okay, this one is looking flat and range bound, unfortunately. I did take a trade here last Friday. Okay, it was a nice flag. So yes, pair price action was pretty bad. It was pretty flat, corrective and range bound right here, but we had a nice impulse to the upside. Okay, nice momentum, strong big blue candles, clean close on the top. And then we had a nice flag formation as well. First high, first low, second high, second low. Blue candle is the entry candle. And this was looking very high probability in my personal opinion. This was the entry. I took it with a 20 pip stop loss. As I said, my new plan involves creating a variable stop loss, right? So I used to use a fixed 12 pip stop loss for all the JPY pairs, but if the volatility gets a bit higher, if there is a big volatile event, or if the price action just looks very erratic, I will extend that stop loss to 15, 20, 25, 30 pips, whatever visually looks good. And in this particular trade, the 20 pip stop loss visually looked the best. Okay, so that is why I used it. I see nothing wrong with this setup. I think this is at least a 9 out of 10, maybe even a 10 out of 10. Okay, it would be a 10 out of 10 if the price action was a bit better, but because price action was flat and range bound, I would give this like a 9 out of 10, which is still pretty nice. And I usually take 9 out of 10 trades and 10 out of 10 trades. I sometimes take an 8 out of 10, but in my personal experience, those trades tend to be mostly losses. So For me, it's much better to stick to 9 out of 10 and 10 out of 10. Before I take every single trade, I give it a grade. I just write in my phone and notes, what do I think about the trade? Am I confident? Am I not confident? Do I see any warning signs? And I give it a grade. So it's a good way to evaluate how your psychology was before you took that trade, so you know what to work on, right? And with me having these, let's say, having the trade journal, having all the grades in the trade journal, I now know that an 8 out of 10 trade is not the best, right? Not the best for me, and it's usually a loss. So what happened with this trade? Well, price did go up. Yeah, it did go into a bit of a profit, maybe 1%. Yeah, it did go to 1%, and then unfortunately it did reverse back down, and it took me out for a reduced risk loss. So basically, when the price broke the high, I moved the stop loss 2 pips below this low and then got taken out with this candle right here. This was a no-brainer for me. I would take it again. I'm really happy with the trade. I made no mistakes. Part of the game. After that, same as on the euro and the Japanese yen, we got a big drop. I was looking for sell setups. Unfortunately, we got a big shift in momentum after that, negating all of the sell setups. Price went down once again, but again got a shift in momentum. We did print a flag right here, yes. So there was a flag setup. Let me just mark it. First low, first high, second low, second high. The red candle is the entry candle, okay? But again, too much buying pressure right there. Price then created a V reversal, and this was kind of okay, not really the best, not really the cleanest. And now we're just ranging around, I would say. We're flat, corrective, and range bound. This was some nice momentum, and I was looking for a potential sell setup once again right here, but we pulled back, broke the low, left the wick, which is not good. That is a big warning sign, and retraced. So that was not good to see. And now we're getting volatility. I think that's a news event. Let me just check. If I go to Forex calendar, Forex factory, what is it, Wednesday? So no, I mean, we have FOMC meeting minutes, but that is only at 8 p.m., right? So that is not now. But this actually looks like a news candle, to be honest with you, because it has a huge wick in one direction. That is exactly what a news candle does. A huge body or absolutely huge wicks, or both. You can even get a huge body with huge wicks in both directions. So an erratic candle like this that is far bigger than anything else in the price action is usually a news candle and signals a range. Most of the time when you get a news candle, you're going to get a ranging market. What do you want to see as a trend trader after you get a news candle? So you want to see price continue down immediately after the news candle. So that should be your goal, because if it does this, that means that the bigger players have found, let's say, confidence, and that they have decided to start a trend right after the news. But if that doesn't happen, if you get a range bond market like this after a news candle, and then you get a breakout, most of the time the breakout is going to fail. That is at least in my backtesting experience. It's not going to have enough strength. You need that quick volatility. You need that quick momentum to start right after the news candle, and it is usually going to spark a nice trend. So currently, I do not have the Aussie and the Japanese yen on my watch list. I'm being more patient. It is looking flat, corrective, and range bound, so I'm going to leave that alone. We have a question from Mama Bucket TV FX. Do you still mostly use concepts from Gorilla Trading? So look, all three founders of Zentum Trading, we all met in Guerrilla Trading. So we did learn a lot there, but we did refine what we learned. We did implement a lot of new stuff as well. We're now looking to add, let's say, the S&P 500, which I'm currently backtesting. We have some range bound entries, and I would say we have really evolved from guerrilla trading. But all three of us met there, and we liked a lot of the stuff that we saw in there, which we also now use a variation of that in our personal trading. So, for example, the 1 hour chart. I love the 1 hour chart. I think it's great for swing trading. I think it gives you the freedom of time. I mean, I can just check the charts on my phone once per hour, and I can do what I want during the day. I do not have to be tied down on the charts. So if I went lower to the 15-minute, that starts to create some problems because it's a more fast-paced environment. If I go to the 4 hour, well, then I'm not gonna have a lot of trades, right? I'm just gonna be monitoring the big time frames and taking maybe 1 or 2 trades per month, which is just far too little for me personally. So the 1 hour currently is a sweet spot. May change in the future, but right now the 1 hour does seem the best. Okay, pound and US dollar. Okay, this is interesting. This is very interesting. The pound has been very corrective and range bound in the last couple of months, but then on the 8th of August, it woke up. Something happened. We had this huge downtrend, or not downtrend, but huge descending channel right here. It was massive, and you can see the uptrend that it created. Very, very massive uptrend. Now, I did not take any trades along the way here. I was looking for a flag here, but I was looking for a timed entry, which is a variation of the flag. It has to do with time zones, or not time zones, but basically trade zones. Let's say you have the London session, New York session, Asia session. So it has to do with trading sessions. In the end, I did not get a entry that fit my plan right here on that flag. Then we went flat, ranged around a little bit, broke up once again. No entries for me, unfortunately. Ranged around, broke up, started to ascend, broke down. I do not trade reversal patterns on the pound and US dollar because they do not have a high profit expectancy. But I did like this price action. If this happened on if this happened on the Aussie and the US dollar, I would 100% be looking for a reversal trade. This looks absolutely perfect. But again, I do not trade the reversal pattern on the pound and the US dollar. Okay, well, then we broke up once again. No entry here, broke up, huge wick, range, broke up, and now we're getting some momentum. But to be honest, this does not look trending anymore. It looks ascending. For me personally, this looks pretty ascending because each time that we break the high, I'm seeing weakness, especially right here on the most recent price action. I'm seeing a lot of weakness form. I'm seeing price break the high, print a huge wick, range around for a long time, and then break the high once again. It all depends what will happen in the next candle, right? So the next candle is going to be the key to my forecast for this pair. If we retrace, then I expect for a reversal to happen, and I'm going to be looking for sell setups, right? If this candle closes bullish with a nice clean close, we still have 26 more minutes. And then the next candle continues up with the momentum. I'll look for buy setups. That would be high probability in my personal opinion. But I need to see that strong bullish momentum. What is good is that the price is definitely not flat. It's not corrective and range bound. It is actually moving somewhere, which is exactly what you want to see. So I would be alert with the pound. I would stay on top of it. I would keep monitoring it because something looks to be cooking right here. We had a nice massive uptrend, but maybe it's time for a correction to happen. Maybe we can print that ascending that I was just talking about, go down, and then look for a nice high probability sell setup, and then the price will just explode to the downside. So what is good is that the price is at least moving and that it is not looking like this. You do not want to see this. This is corrective. Flat and corrective. Let me see it on the 4-hour. Yeah, just flat. Yeah, I'm not going to put the pound on the watch list just yet because I'm looking for the confirmation. So we can move on to the next currency pair on the list, which is the New Zealand and the Japanese yen. Okay, Aivi has a question. Hi, Marco. Hope you're keeping well. Just popped in for a quick one. Usually rewatch these live streams. I find them beneficial. Good job. Thank you, bro. Thank you very much for tuning in. And if you have any questions, make sure to put them in the chat. So the main reason why I switched from a forecast and trade recap in a, let's say, replay version or like a filmed version is I want to get more interaction from you guys. I want to get some questions, chart requests, maybe some interesting findings or some other instruments that I don't even look at. So just for the interaction to go up, it's going to be more fun for me. It's going to be more fun for you as well, because just by talking at the screen and filming a video, that's pretty boring. So this does make things a bit more entertaining and a bit more interactive as well. So yeah, thank you everyone for tuning in. And if you have absolutely any questions, just put them in the chat. We will definitely go through them. NJ is the final currency pair that I actually trade live. And then we're going to do some big ones that I do not trade live, but I find very interesting. And NJ is flat. Unfortunately, NJ is pretty flat, corrective, and range bound. Right here, it was flat. I wasn't looking for any setups. I mean, this just, if you squeeze in the price action a little bit, yeah, nothing much was forming on this currency pair. Broke the high, retraced, printed a V reversal, but not the cleanest one. Actually, it looks good. I did say with a V reversal that I want to see momentum go down and up with same sort of force, which here did not really happen, but it looks okay. It looks all right. It could not commit, so we never got that strong uptrend that we usually get after a V reversal. Instead, we got ranging price action, which is not good to see because I'm looking for mostly trending entries on the New Zealand and the Japanese yen. So yeah, this looks flat, corrective, and range bound. And my game plan is just to look for a large push up or a large push down. Just looking for momentum up, momentum down for the price to clean up. Maybe this V reversal can still play out, right? Maybe we can get the V, the range, and then a massive push up maybe a bit later. I don't really think so. I think we're going to get more corrective price action before anything. But anything can happen in the markets. We just need a couple of hours of price action to switch up the market conditions, right? If you get, let's say you get just 3 hours of bullish price action like this, well, that's already a great story, and you can look for a buy setup. So the markets can switch in just 3 hours. It goes very fast. That is why you need to stay on top. You need to keep monitoring the charts and not slack off. What I use is I use this like a smartwatch, right? It has an alarm, goes off every hour, and then I just check the charts on the phone. Makes things very simple, and I can go on with my day. So that's it for NJ. Nothing much to say on NJ anymore. I'm just gonna go grab a glass of water, and then I'll be back. Okay, so we're back. And the next one on my list is going to be the S&P. So currently backtesting this pair with the trending entries that we use. If you want to see a good trade that would fit my plan, for example, it's this one, right? This is a clean cut break and retest setup, nice massive momentum going up, one candle pullback, no selling pressure, break of the high with force, clean close on the top. So this is absolutely perfect. Usually, so currently I'm testing this with, I think it's a 20 pip stop loss. No, it's 15. So I'm using a 15 pip stop loss and set my order, and price then does hit the take profit. And also I'm using a fixed take profit. So what I have found is our regular trade management rule does not work as well on the S&P as it does on Forex pairs. The reason is the S&P 500 is tied to the 500 of the best US stocks, right? And stocks do not trade 24/5. They trade only, I believe, 8 hours every day. So the volatility is going to be very high in those 8 hours, and it's going to be lower outside of the trading hours. But the S&P 500, the S&P 500 trades 24/5. So you can execute buys and sells for the whole day for 5 days in the week, I believe. And that is why you're going to get these periods of flat price action, right? See here, nothing much happening, low volatility. And with our current trade management rule, you can easily get taken out of your position. You can easily get taken out of your position for a break-even trade or a reduced risk loss, and then the price goes in your direction. So because of that, I did change my approach with my backtesting, and I'm now backtesting with a fixed 15 pip stop loss, currently using that, and a 3-to-1 risk to reward, and it looks good so far. Looks promising. I have much better results than using a trailing stop loss, because again, that trailing stop loss is only good for currency pairs that have momentum for 24 hours during the day, right? And as I said, the S&P usually is stagnant for these periods when the US stocks are not being traded, and it's just very choppy price action. It's not good. So I would suggest having a fixed take profit instead of a trailing stop loss for the S&P. Currently, what's my analysis? Let me see. It's kind of flat. On this 1 hour chart, it's a bit flat. 4 hour looks to be in a big uptrend. Definitely 4 hours is in a big, strong uptrend. We're getting some nice, large bullish legs. Alfonso says, thank you. Yeah, no worries. No worries. If you're referring to the S&P analysis, I'm glad to help. 4 hour, nice, strong uptrend. I would expect more bullish price action, and the daily is definitely showing a lot of buying pressure. Look how it corrected all of this. So we had a big V reversal. This is a clean one. I would say this is a clean V reversal. You have similar momentum going down and similar momentum going up as well. From the lowest point, we went up, 10%? That's nice. That's pretty big. And look, we corrected almost all of this move. So I know a lot of people were calling for a recession, for a crisis, black swan event, worse than COVID at this point. But again, it didn't happen. Instead, we had a big bounce, and I think we're going to hit all-time highs pretty soon. I think this is just going to rocket up, and we're going to continue with this bullish uptrend. And this is great to see. You always want the US economy to be bullish, booming, and because it's going to bring a lot of prosperity and a lot of economic growth to some other assets as well. Things are going to be moving, and yes, you want movement to go up or down. What you definitely do not want is just flat range-bound price action. But if I had to pick, if I want to see the S&P go up or down, I want to see it go up. It's much better. And that is why also, if you're trading the S&P on the lower time frames, just know that the overall bias is bullish. So you're going to have more buying setups that are winners than selling setups. Why? Well, because the S&P is mostly in an uptrend. So there's a big, you can call it a daily bias for the price to go up. So you can be maybe more aggressive with your buy setups. Just keep it in mind. Scrummy, what's up? How are you doing? Great to have you join the live stream. Okay, that's it for the S&P. I like this bullish momentum. I want to see it break the high and then, of course, continue with the nice, strong uptrend. Next one on the list is going to be NASDAQ. We can start from the daily and then go all the way to the 1 hour. It looks pretty much the same as the S&P. 4 hour in uptrend. 1 hour is looking kind of flat here on the most recent price action. But again, I'm mostly looking at the daily. It's looking nice. It is correcting most of this downtrend. So that is a very bullish story. Thanks, I'm fine. Hope you're well. Are you vacationing? No, I'm just here for like 2 or 3 days on the seaside, and then I'm going back to Zagreb. Unfortunately, that is why the background is a bit different. So yeah, I'm currently on the seaside, but just for a few days. I had a big vacation a couple of weeks ago, but now it's time to get back to work and get back to Zagreb, where I have decent internet. Here the internet is pretty shit. Okay. Gold. Oh my god, gold actually broke the high. That is good to see. So I was definitely looking at this. And also, Scrummy, where are you vacationing? Are you currently on vacation, or you can put it in the comments. Basically, I was looking at these levels. This one, which got broken, but then we got rejected, and then this one, which has now been broken. And this is good. This is pretty bullish. I mean, it looks corrective. Yeah, thank you, Scrummy. Thank you very much. It looks a bit corrective, but it is good that we are breaking the highs and possibly breaking out into a big uptrend. No, not as of now. Lots of work to do. Okay, cool. Well, we have to do the work so that we can relax and go on vacations. But yeah, gold finally broke this level. Let's see if it can continue. 4 hour, a bit corrective. Yes, we had some nice bullish legs, but it doesn't look that clean. I did test our trending entries on gold, but it wasn't really a good story. I did not have a lot of success. I mean, gold is pretty corrective. Most of the time, gold looks like this, and that is not something that I can work with. It's not a good story. 1 hour. Yeah, just flat right here. And that's it for gold. Getting interesting. Let's see if this can happen again. I want to see this strong uptrend print once again. That is very good. Until that happens, I'm going to be more patient. Silver, still in no man's land. So still doing pretty much nothing. Being corrective, flat, and range bound. What usually happens is you have gold leading the move. You're going to have a trend on gold. And then so after you get a trend on gold, the silver will follow suit, right? So silver is kind of like an altcoin. You get Bitcoin moving first, and then like after a couple of weeks or maybe even a couple of days, you have the altcoins following and creating a nice uptrend. But for now, silver is not breaking this major high. It is still pretty stagnant. Okay, 1 hour, let's check that out. 1 hour wasn't an uptrend, actually a good one. I like this momentum. I like this momentum. It was looking pretty good on the 1 hour, I have to say. I just don't trade it. I would rather focus on gold. I think silver is interesting, but I think gold has more opportunities, better movement, maybe. So yeah, gold is kind of the more important instrument, and silver follows suit, as I said. Okay, the Sheikh family. Hi, Marco. How much are you funded with FTMO and in total as of right now? So I have 50K from FTMO and I have 50K from Alpha Capital. I have 100K FTMO stage 2 running. I have Alpha Capital 100K in stage 2 still running. And I'm doing Darwinex as well. I have a nice profit on Darwinex. If you want to see it, you can check out my channel. The video is, I think it's the last video where I go through my Darwinex account. So maybe once I finish the calibration phase, I'm still in calibration. But once that is done, maybe I can get some funding from Darwinex as well. So we will see. Again, my recommendation, Alpha Capital is pretty shit. So you should stick to the big prop firms such as FTMO, or the old prop firms such as FTMO and the 5%ers. I'm definitely not going to be buying any more Alpha Capital accounts in the future. I'm going to be maxing out the FTMO and then moving on to the 5%ers. That is the game plan. Alfonso, all of your analysis is thumbs up. Thank you. Thank you very much for the feedback. Recommend to take a trade with the S&P. So I personally do not currently live trade the S&P. I'm only backtesting it as of yet, and I would not give you any sort of a signal because, again, I do not have any live trading experience with the S&P. Right. On the 1 hour, I think it looks a bit flat on the 1 hour. So even if I was trading it live, I would not currently be looking for a setup. I would look for this sort of price action where you had a massive impulse and then you get a entry opportunity, right? Compare this price action to the price action that is happening right here. This is pretty flat and corrective. So I would currently not be interested if I was trading it live. Have you ever been funded with FTMO before and got paid out? So I have had a 50K funded account with FTMO, but I blew it. Unfortunately, I never got paid out. Nico and Griff, who are with Zentum Trading, so we are kind of the free mentors at Zentum Trading, they got paid out a lot from FTMO. They had a lot of payouts and they like it, right? FTMO is the OGs of the game, the biggest prop firm, has the biggest liquidity behind them as well. If there are any issues, they are the firm that will most likely pay out, right? Nothing is guaranteed because this prop firm space is pretty volatile. There is a lot of scammers. But if I had to pick the best prop firm, it's going to be FTMO. As I said, Alpha Capital is getting a bit sketchy. Yeah, no worries. No worries, bro. Glad to help. Bitcoin. Let's see Bitcoin, because Bitcoin has not been moving much. So we didn't have much action on Bitcoin. Gold, as I said, finally broke out of this level, but Bitcoin and S&P is just rocketing to the upside. But Bitcoin is pretty range-bound, corrective, and flat. So not a good story. Not a good story. With Bitcoin, you want to see the activity, especially on social media. You kind of want to see that marketing train. A lot of people talking about it on Twitter, YouTube, Instagram, the news as well. If you read the newspaper, you want to see articles of Bitcoin in there. That means Bitcoin is pumping up. But this is not a good story. The longer we're flat, corrective, and range-bound like this, the more of a bearish scenario I have in my head. So currently, I think this is more likely to go down than it is to go up. Andre, hi Marco, how much percentage do you recommend to risk on challenges if it is in drawdown? I am trading Gorilla 1 hour 2. Okay, so what I do personally and what my good friends do as well, and what brought them a lot of success with prop firms, is 1% for stage 1, 1% for stage 2, no matter the drawdown. So if you're in minus 8%, you do not lower the risk size, right? You just keep the 1%. If you blow that challenge, buy a new one, right? Buy a new one and keep on following the plan, keep on executing. That is going to bring you success. For the funded stage, 0.5% per trade. And if we are in drawdown, in big drawdown on the funded stage, if we're in like minus 8% drawdown, we may drop it down to 0.25% risk because it is the funded stage. So we want to kind of save the account. But generally, what will bring you the most percentage I personally believe, with as a swing trader, is 1% on stage 1, 1% on stage 2, and then 0.5% on the funded stage. So yeah, that is what I recommend. Do you guys have any final questions? Because we're going to wrap it up pretty soon. So if you have any last questions about anything, prop firms, trading strategies, instruments, S&P, gold, Bitcoin, just put it in the chat and we will get it covered. For my analysis, we are kind of done right here. So we did the Bitcoin. Ethereum is dropping. It's actually not doing anything, but it is looking very bearish. I do not like the look of this chart. DXY dropping down. DXY is definitely losing steam. This is the dollar index. This is the strength of the dollar, which is weakening. This looks like a very nice downtrend. I like this price action. I especially like these 3 bearish candles. That is a very good technical formation and a good sign that the markets are going to continue dropping. US oil on the daily looks flat. 4-hour, kind of corrective. 1 hour, a bit flat as well. We had a nice downtrend with some big bearish legs, but now it is flattening out. So nothing much for US oil. Andre says, thank you so much, Marco. Good luck on your verification. Thank you. Thank you very much. So I have 2 accounts running in verification. Hopefully I get that done, and then I can have 300K in funded accounts. So that kind of wraps up this live stream. Hope you guys enjoyed. Hope you took some value. Join me next week on Wednesday. Maybe I will. Yeah, it's gonna be there. I'm pretty busy next week, but I'm gonna squeeze in a live stream on Wednesday. So definitely follow me on Instagram as well if you want to see when I'm actually doing the live streams. And good luck with your trading. I will see you guys in the next video.